Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the cues for trade, the big tech earnings, Infosys reporting numbers today, and TCS reported Q4 numbers yesterday. We'll be discussing that in details, and we'll also be getting you details on the CPI inflation that has cooled off to a 15-month low. And if you have any stock-related queries, send them in to us on our live feed, and we will have them addressed by a technical expert on the show. But before we do all that, let's take a look at the top headlines at this hour. Wall Street ends lower as key indices erase early gains. Fed minutes stoke recession fears despite a cooler than expected inflation print. Asian markets largely lower after a weak handover from Wall Street, and SGX Nifty is hinting at a muted start for our Indian markets. Inflation slows to a 15-month low in March. CPI inflation drops to 5.66% thanks to a sharp drop in food prices. February IIP grows by 5.6% in line with estimates. TCS Q4 earnings miss estimates, both dollar revenue and margins below estimates in constant currency terms. Revenue growth dips to a 11-quarter low. Meanwhile, K. Krithivasan will take over as the new CEO from the 1st of June. Infosys set to report Q4 results today. The tech giant may deliver a muted growth amid macro headwinds. Street will watch out for any impact on its BFSI business and hiring plans. Well, let's now bring on board Hemen Kapadia to discuss what the setup is looking like this morning. Good morning, Hemen. Good to have you on the show. Well, the Nifty has gained for an 8th straight day, and this morning, SGX is hinting at muted cues, or in fact a negative bias. Above that 17,800 mark, do you think now is the time that the index will take a pause and some profit booking will kick in today?
A very good morning to you, Nandita. Thank you for having me. You hit the nail on the head. You're absolutely right. 17,800 has been a resistance of sorts for quite some time. So frankly speaking, like I said, we moved up for multiple days. We are distinctly overbought, Nifty, Bank Nifty, both, Nandita. We're due for a small correction. And if that comes, I think that will make a market that much more healthy. And frankly speaking, it needs an excuse. And today just might be the day that's happening because we have a long weekend coming in. People would not want to take big positions. And yes, if there is a hint of pressure from US, Dow Jones is a bit weaker. 17,700 is what we need to close below for a correction to come in. So yes, I think it's right for a correction. Probably that starts today, Nandita.
Right, let's also talk about TCS then. Q4 numbers came out yesterday. The company has missed estimates. Profit rose 5% on a QOQ basis. And, in constant currency terms, we saw revenue growth at 0.6%, which also missed estimates, by the way. And, revenue has risen 1.6% on a QOQ basis to 59,160 crore rupees. And dollar revenues are up 1.7%. That was also, a miss when it comes to, to what analysts were expectations. Margins, mind you, were at 24.5% vis-a-vis expectations of a 50 basis point expansion. We saw them come in flat at 24.5%. As far as commentary goes, management has said that the client sentiment has weakened in Feb and March. And, no large-scale projects have been cancelled, but discretionary projects have been put on hold, and that may have an impact on billings. Important to note that K. Krithivasan will be taking over as the CEO and MD from the 1st of June, earlier than the September date that was outlined when the management changes were announced. In fact, let's also take a look at what the street view or street verdict is on the stock after the Q4 miss from TCS. JP Morgan has maintained an underweight target with a target price of 2,700 rupees per share. In fact, it says that uncertain macro and tech spends should drive a softer first half of FY24, and it will pull down growth for FY24 going forward. It has cut revenue estimate by 1% and margin by 25 basis points, which could drive a 2% EPS cut on the stock. Citi, on the other hand, has maintained a sell rating with a target price of 3,000 rupees per share. It says that weaker than expected Q4 in fact has called for a sell rating on the stock, and valuations still remain high with regular wage hikes. Margin estimates may also need to be revised down. If you look at CLS, well, that has maintained an outperform rating target at 3,550 rupees per share. It says that the Q4 print is weak, but the order book has been healthy, and that could be reassuring when it comes to the medium-term outlook. However, in the near term, of course, the management has already highlighted some uncertainties, and that may weigh in on the stock. Jefferies has a hold rating on the stock, target price 3,375 rupees a share, and it has also cut estimates on the stock by 2 to 3%. In fact, the cut the earnings estimates by 2 to 3%. So the cuts have been majorly in the range of 1 to 3%. No major earnings downgrades coming in, but near-term uncertainties will weigh in on the stock. That's the verdict from the street. Let's also listen into what the management had to say at the press conference. Both CEO Rajesh Gopinathan as well as CEO designate K. Krithivasan, what they had to say at the press conference when it comes to the future outlook.
This quarter has definitely come in weaker than what we originally anticipated, and primarily coming out of North America. North America had slowed last quarter, but our expectation was that it is a cautionary stance from clients, and based on our discussions with clients, and we had expected that it will bounce back into the first few months of the new year. That has obviously not happened. Calling it forward is difficult, so we are doing what's in our control in terms of positioning ourselves to be able to handle it on either side of it.
So on the BFS side, last quarter itself we had called out there are some, because of the interest rate and inflationary regime, like there have been issues in the insurance sector, capital market and mortgages. What changed this quarter more than anything to do with inflation or interest rates is sentiment, right? Like what happened with one in the banking sector. The sentiments are quite down and people are all not sure what's going to happen. And so there was a greater rush to preserve costs.
Hemen, let's talk about TCS then. It seems like it will weigh on the entire IT pack in today's session, given the fact that the commentary has been weak, and the outlook for future is, at least for the near-term future, is clouded. And in fact, Infosys is also reporting its numbers today. Do you expect the weakness, if we see any kind of weakness on TCS, it will weigh on the entire sector in today's session?
I think so, Nandita, because sentiment-wise, it makes a big deal. And if you look at the Nifty IT index and specifically TCS, I mean, we peaked at a high of around 3989 in October 2021. Now, we are 1.5 years into the correction. So frankly speaking, somewhere, whatever we've seen in terms of the fundamentals or the muted results is built into the stock price, Nandita, because many stocks made new highs. The Bank Nifty made a new high. Many of these stocks in the IT sector didn't. Okay, yes, we've been riding piggyback on the NASDAQ and we've been doing well in the past, let's say, with some hits and misses in the past few months. But yes, we have been range bound, we've gone nowhere. And if you had bought TCS a couple of years ago, or maybe 1.5 years ago, you wouldn't have made anything despite the buyback. So frankly speaking, built in somewhere, but yes, I think it would weigh down the entire sector, like you said, because it's a bellwether. So that would have some sort of a trickle-down effect.
Right. Hemen, hold that thought. We'll come back to you and discuss more stocks. But let's also go across to a banking editor, Dinesh Unnikrishnan, to discuss the CPI retail inflation figures that came out yesterday, which, CPI inflation for March cooled off to a 15-month low of 5.66%. And, that has come back into the RBI's comfort zone after 2 months. Dinesh, good morning. Good to have you on the show. So, the RBI stands vindicated because, they were anticipating inflation will fall under that 6% mark, and that's exactly what has happened.
Very good morning, Nandita, and thank you for having me on the show. Yes, you're absolutely right. No surprises here. One must note that base effect has played a role in the lower inflation number, but at the same time, the food prices have eased, which is quite interesting to see in the month of March, when generally food prices are likely to escalate. And also, very important point, the core inflation, which is the non-food, non-oil part of the non-volatile part of the inflation has also eased to almost 18 months low of 5.74%. So this is also happening after a few months. So overall, the sentiments are very positive. The MPC should be happy to see this number. And this, in a way, guarantees kind of pause in the June policy as well. And I expect the the overall inflation numbers to stay below 6%, and if there are no surprises on the upside from the monsoon.
Right. Would you say that now we are in for a longish pause and much of the rate hikes are behind us now?
Yeah, that's what it looks like. But there are two risk factors. That is, one is on the what is happening on the crude prices, because the commodity inflation can be a big upside risk for the rest of the year. If the crude continues to inch up, that can have a bearing on the local inflation. Secondly, how the monsoon is panning out. So as you know, the forecasters have kind of not contradicting, but the SkyMet has predicted below normal monsoon, but the IMD has the normal monsoon. So how monsoon is playing out, the impact of this will be mostly in the second half of the year. Also, what is happening in terms of the food prices in the next few months, because this month the easing of food prices have really helped. So, the RBI should be watching for the trend. If inflation, as you know, they have projected for 5.2% for FY24. If inflation continues to stay below the 6% mark for the rest of the year, we may see a prolonged pause, and later, if you are lucky, a rate cut by the end of the year.
That was going to be my next question, Dinesh, because RBI governor had clearly said that it is a pause and not a pivot. So what I wanted to know from you was, do you expect a pivot, in fact, a rate cut in the second half of the year, say October, November around?
Well, as we discussed in our columns and discussions post-policy, the RBI signals are a bit confusing this time. There were much weight on the local factors till February policy, but now they are talking more on what is happening globally and the import inflation, etc. And the governor has clearly said that they are watching the upside risk. But, my sense, Nandita, is that it's going to be a prolonged pause, because the RBI the MPC has set the benchmark for higher inflation now at around, 6.1%. Only if, in the sense, they chose to pause despite inflation being above 6% in January and February. So one should understand that, only if inflation crosses that level, so spikes sharply, then only there will be possibility of a rate hike. So as of now, I think it's going to be a rate pause, like I said, in June. And if inflation sustains below 6%, provided there are no negative surprises on monsoons and the crude prices don't, explode internationally, then we may see there is a possibility of a rate cut happening towards the end of the year. That is very much a possibility at this point.
Right, Dinesh. Well, with that, thanks a lot for taking out time and joining us this morning. But before I move on to Hemen, I would like to point out that Infosys will be reporting its fourth quarter numbers today, and the expectations are that both the revenue and profit growth will remain muted. And the tone has already been set by TCS, which was largely a miss when it comes to margins and dollar revenue as well as constant currency revenue growth. In fact, weak financial services and seasonality may also play spoil sport when it comes to Infosys. Q4 revenues, if you see, they may rise somewhere around 1.4% and profit may grow somewhere around 0.6% on a QOQ basis. In fact, constant currency revenue growth may range between 0.3% to 0.6% on a quarter-on-quarter basis. Remember, Infosys has a 26% exposure to BFSI sector, and which is why commentary on the BFSI sector in wake of what is happening across US regional banks, or in fact the banking turmoil in the US, will be eagerly awaited. And when you look at the guidance, it may guide for a growth of somewhere around 6 to 8% on a YOY basis when it comes to revenue growth for FY24. And as I said, commentary on IT budget allocations, deal wins are some of the things that will be keenly watched out for by investors, aside of any kind of guidance on margin trajectory when it comes to FY24. Well, that was all about the IT earnings and Infosys. Let's also move into some queries that are coming in this morning. Hemen, we are getting a query from L&T, and this is coming in from Dev. L&T as a share, in fact, has seen gains to the tune of 11 to 12% on a YTD basis, and over the last 5 days, it has had a very good run, somewhere around 5%, because it has won a slew of orders in recent times. What would you advise investors to do? Is there more upside given the fact that it is moving towards its 52-week highs?
Yeah, we're in a very peculiar situation, Nandita, positively peculiar. Peculiar because, like I said, we've had a good run in the near term. The thing is, we've been moving 19 weeks, Nandita, 19 weeks and counting, in a range between 1975 on the downside, 2050 on the downside and 2300 on the upside. So we've been here for 19 weeks. Now we are trying to break out from here. But 2300 is a weekly level. We posted a high of 2330, Nandita. Like I said, 52-week high, probably an all-time high also. And we're on the cusp of breaking out. We have moved up from a low of 2120 to 2330 in 5 or 6 trading sessions. It could consolidate a wee bit over here. But like I said, if it closes about 2300, then it opens the doors for something with a target of around 2500. So it looks good. We are in a short, medium, long-term uptrend. But we're at 2300 and we've never given a weekly closing in history about 2300 ever. So I'd be slightly cautious. Outlook remains positive.
Outlook positive, but slightly cautious on L&T. That's the call from Hemen. Hemen, the next query is coming in from Preetima Pandey, and she has a query on Nucleus Soft. Now, this stock has had a great run on a YTD basis, but off late it has come under pressure. In fact, yesterday also it was down somewhere around 4% or so. Would you advise investors to actually use some of these dips to buy into this counter now?
On the daily chart, combined with negative divergence, Nandita, would seem to indicate that we are going to take a breather. So I would wait just a wee bit to buy. I wouldn't advise a buy at this level. We walked into a corrective phase. Okay, right now it's just on the daily chart. That is not very relevant in terms of things. But this might just get acute. So I'd say wait a bit. And if you do intend to buy, we're at 631. Support levels come in at 600 and 580. So I'd wait a bit. Like you said, we've had a brilliant run up from 365 to 700. So we've almost doubled. Time being, we walked in a correction, which just might take time longer than we think it will.
Right. The next query is on HDFC Life. This is coming in from Tariq Ahmed, and he wants to know your thoughts on this stock. Now, life insurance stocks had come under a fair bit of pressure after the budget, we all know. But over the last 5 days, it has had an okayish run, gaining to the tune of 2% or so. What would you advise investors to do with this counter now?
Yes, Anita, for the last couple of weeks, yes, you're right. We've had HDFC Life staging a smart recovery. Now you look at ICICI Lombard, you look at ICICI Pro Life Insurance, you look at HDFC Life. The monthly setup isn't too convincing. The lower tops, lower bottom sequence continues. But yes, the daily chart, yes, there's a clear short-term bottom in place. I believe that there is also a possible medium-term base formation. So short to medium term, the setup is turning positive. We've come off from 770 and we've continuously been going down for in fact, almost 12, 13 months, Nandita. We are taking a breather. So currently, once again, short to medium term things are positive. Longer term, I need some more time in price confirmation to say that a bottom is in place. But yeah, whatever price action we are seeing on the shorter and medium term charts is indicating at least some technical green shoots, Nandita, at this point in time.
Right. Let's quickly move on to the next query then. We have a query on United Breweries. Hasn't had a great run on a YTD basis. In fact, it has been in a steady downtrend, if I may say so. What are your thoughts on some of these liquor stocks now?
Frankly speaking, a bit disappointing. There was a setup a few weeks back where one would have thought there's a consultation and a bounce is coming in. Well, that was a misnomer. Didn't happen. Turned out your distribution, like you said, we've been gradually coming down. So the setup doesn't look very convincing. Yes, deeply oversold, no doubt. Downside might not be too much, especially since we've come up from 1800 to 1360. No signs of a reversal yet. On the other hand, if one were to look at United Spirits, Nandita, there is some stability coming in. We've been moving sideways for around 9 weeks. There is strong support at 730. short-term positives seem to be coming in on the charts. The mechanical indicators on the daily charts have given a crossover buy after positive divergence. So if I'm sticking to the main line, the F&O stocks, Nandita. So if United Spirits, aka McDowell's, looks relatively much better than United Breweries, Nandita.
USL looks much better than UBL. I would like to take up a stock with you, Vedanta. There's a setback that has come in. Supreme Court has quashed the land acquisition order. In Odisha for its university, right? So, on the charts, it has been pretty weak. The strength in dollar index has also weighed in on some of these metal counters. It has literally halved from its 52-week highs. In today's session, if somebody has to take a short-term view on the stock, what would you advise them to do now?
I would say stay away. There isn't a trending bias at the moment, and over the last 1 year or so, we've had big dividends to be accurate. Currently, we're 7 weeks into a range, Nandita, between 262 and 295. So there is no trending bias in the short term. So one is not sure whether to go long or short. I say stay away. If one needs to act, either you buy at supports or short at resistances. Currently, we are in no man's land. Stay away.
Well, stay away from Vedanta. There's another stock, Edvenswa Enterprises. Purinju Veliath has bought a little under 1.5% stake in the company. Now, the stock was up 5% in yesterday's session. What are the charts saying on this one?
Edvenswa Enterprises. I don't think I tracked the stock, Nandita, because...
All right. No worries. Let's take up a query on ITC in that sense. Manish Rai has written in and he wants to know your thoughts on ITC. Now, this stock has been on a roll. In fact, its market cap is also nearing that 5 lakh crore mark. Good times ahead for ITC now?
Well, yes. ITC spent 2.5, 3 years in a hiatus, so to speak, between 2018, 2020. And now we posted a fresh all-time high. Where in the end, you had Davos and the Maricos and Unilever running better. So now it's time for it to be for its place in the sun, so to speak. Looks good, all-time highs. We've had a run-up, but the way things are, and if I were to look at long-term charts, we are safely ensconced in a longer-term uptrend. This is 393. We should gradually gravitate towards 450 and maybe even 500 in the next few or maybe in this calendar year. Looks good. Either buy on decline sort of a stock.
Well, edging towards 500 maybe in the next few months rather. Let's take up a query on the pharma pack. Raghunath has written in and he wants to know your thoughts on some of these counters. But yesterday we saw a good run on the pharma stocks. Divi's Labs up 7 to 8%. Cipla, Dr. Reddy's, all of them in good stead in yesterday's session. More upside going forward?
I think so. At least the short-term charts have turned up radically fast. Well, after 19 weeks of a decline, if you look at the Nifty Pharma Index, Nandita, not very surprising of a bounce back, but the ferocity of the bounce back is indeed a bit surprising. Interestingly put, there are a few stocks. Market still remains slightly iffy, Nandita, but specifically pharma stocks. Now, if Aurobindo has been a perennial underperformer, but now if you want to look at the charts, the oscillators are improving on the monthly charts. Glenmark is another stock where the monthly, why I'm harping on this is because the longer term picture is improving. Even something like a Dr. Reddy, we've had a few years where it hasn't performed. And now we're seeing positives on the monthly chart. And yes, Divi's Lab has gone up and how. So many of the stocks are in a comeback mode, but something like Aurobindo, Reddy's and Glenmark are even improving on the monthly chart. So that is a tad bit surprising. The setup is good. If many of the stocks have, now Laurus Lab went up 8% yesterday, but if something has gone up very fast, I don't think it makes sense to chase it. Yes, the stocks which look good on a longer term point of view, especially which are fundamentally better, that one can look at from a longer term point of view.
Right. I think with that, this wraps up our query segment as we're running out of time. But before I let you go, Hemen, leave us with some stock recommendations for our viewers this morning.
Yeah, firstly, a buy call on Deepak Nitrite. We've moved sideways, doing nothing, and this has been almost 10 weeks now, and the technical setup is improving. Looks set for a breakout. Hasn't yet happened, but I'm anticipating a breakout. One can buy Deepak Nitrite at 1840, stop loss 1790, a target of 1940. Secondly, there's a buy call on Metropolis Healthcare. Tremendous positive divergence yesterday, huge volume spike up. A weekly base has been made, and now we're in the verge of doing an upward bar reversal on the weekly chart. So looks interesting, positively interesting. One can buy Metropolis at 1290, stop loss 1240, and target of 1390.
Well, Deepak Nitrite and Metropolis Health, two stock recommendations coming in from Hemen this morning. With that, Hemen, thanks a lot for taking out time and answering all our viewer queries as well. Well, with that, we're completely timed out on this edition of Morning Trade. So it's a goodbye from me and my team that has put the show together. And don't go anywhere, because coming up next is Opening Bell.